lived in Australia, lived in New Zealand, Malaysia, England, Ireland, right? So you probably imagine living in all these countries.
Richard Armstrong, welcome to Rising Giants. We are very excited to have you on the show today. Thank you for taking the time to spend with us to cover the VC landscape in Thailand, across Southeast Asia, your background. You're currently a venture partner at TA Ventures, leading the emerging markets efforts there. And I think a great place to start is, tell us what's going on. What are you currently working on at TA Ventures?
Yeah, man. Really appreciate, you guys both having me on. I think, it's heard many good things about your podcast from my portfolio companies, as well as, some close friends, right? So, thanks for having me on. And yeah, look, I mean, maybe I'll give a bit of an intro about me first, right? Born in Thailand, grew up in quite a few countries around the world, lived in Australia, lived in New Zealand, Malaysia, England, Ireland, right? So you probably imagine living in all these countries from an early age. You get a strong understanding of, people, technology, things like that. So, I've been extremely grateful for the opportunity. Started as an entrepreneur, 2 times founder, been angel investing, probably over like 70 companies now. And then, now been in the VC ecosystem for some time. As I say, at TAV now. Happy to share a bit about TAV later and a bit of what I'm doing. And if you guys have any questions in here and there.
Okay, perfect. Yeah, thanks for that background, and maybe
No
going back
worries.
to the start of your journey as a you said that you're a 2-time founder.
So let me share a bit about my background, right?
Mhm.
In terms of in general. So having been a 2 times founder, the first company was purely bootstrapped. We just helped scale that up and things like that. We were working with some of the big creators and things like this, and big media platforms in the region. So this was a profitable business, right? We didn't raise any VC money. Great model. We helped it scale here and there, and then so that was my first business. The second company was was actually a food waste company. I was more of an investor there. As they say, help them scale up, did all the fundraising here and there. It was more like a first investor, but also co-founder, right? And then, as you know, delved into the investment angle, angel investing for some time, and then, did quite a lot of deals around the world as well as in Southeast Asia. And then, ended up at TAV, right? So I've sort of been on the founder side, seeing firsthand as well how founders are and how founders, operate, right? And then what I realized along my journey is that, it's very hard to raise capital, right? And, I wanted to, like, being an outsider as well at the beginning, it was super hard to raise money. So I sort of saw the angle was like, okay, how I can give back to founders and things like this is, okay, if I'm on the other side of the table, I can help open the door for them, right? Especially in a market like Thailand where capital isn't as readily available as the US, right? So that's a bit about how I landed in, venture, right? I mean, a lot of people managed to help me quite a bit as well. In terms of, I helped quite a few people, and then, a lot of people would help you in return, right? So it's sort of like giving back in a way, and also, helping take good opportunities. So that's a bit about how I landed in, my journey from the startup side to the venture side. So
That's great. And you mentioned about specifically around fundraising. Can you talk to us a little bit about some of those challenges that you face as a founder and those learnings that you're able to take to now supporting other founders as an investor when they explore options for fundraising?
Yeah, look, I mean, I can talk about maybe from the founder lens, and I can talk to the investor lens as well, raising from my portfolio companies here and there. Firstly from the founder lens, right? At the beginning, I had no clue how to raise money. As I said, I just thought, oh, okay, it'll be easy, right? You talk to 1 or 2 people, and they'll give you a check, right? That's not the case, man. So. Look, I think in the first, like as I say, my second company, because the first company was just bootstrapped, right? The second company, we talked to everyone. Like, I think we had about over like 200 meetings with just investors and things like this. And, a few said yes, and a lot of them said no, right, and didn't get it. But that's, I guess, it's a numbers game, right, with, in venture. So it's like you talk to as many, and then 1 or 2 would say yes. So that was actually like a hard lesson. And, maybe we could have figured out ways how to, okay, maybe raise money earlier and raise more money than less money, so to give us more runway. So anyways, it was lessons learned, right? And then on the advisory side, advising a few companies, I always tell my founders that we should raise, as they say, only what we need, right? Because what sort of happened in 2021 was, a lot of my founders as well in 2022, right? More 2021, late 2021, right? They were like, oh yeah, we got this term sheet, we got this, deal. And I'm like, okay, what's the terms? And they're like, yeah, it's really good, right? And then, okay, but this valuation is much, much higher and things like that. And I'm like, okay, do you guys think you can grow into that? And a lot of them said, not sure, right? But they're giving us money. So I think it's more to say, like, there's, if you have a few options on the table, you should really consider that. And, you should say, not take the most expensive deal, but, not take the highest valuation, but more or less, one, as I say, what do you think it could be something realistic for you, right? Because, I know some companies as well, some of my portfolio companies that raise at astonishing high prices, and I don't know if they'll ever get there, right? So yeah, I would say just taking those learnings and helping founders, set up like, just meeting investors and setting up, fundraising plans here and there. So yeah, got to help them quite a bit there.
Yeah, that's a really interesting point you brought up of maybe not wanting to raise at the highest valuation because and asking the question of, can you grow into it? That's something that would be interesting to explore on in this conversation a little bit about how you're able to help a founder from an advisor role justify not taking more money and instead taking what makes most sense for the business. I'm sure, from a lot of founders' perspectives, they're like, well, we have all this money in front of us. Like, why would we not take it? And as an advisor, how do you help justify that to them?
Yeah, I think it's a combination of things, right? I mean, you want to see what, firstly, is good for not just, as I say, you as the individuals, right? What is good for your employees as well, right? Because so there's multiple factors you can consider. As I say, that's the main one. The second thing, as I say, is that, for example, does this money give you what it takes to hit milestones, this next milestone, right? And then sort of go from there step by step. Because venture has always been this sort of ecosystem where you get to from pre-seed, and then you hit X amount of milestones, and you raise your seed, and then you raise your Series A, and then you raise your Series B, and then onwards, right? But I think that's beginning to change as well. I think founders are needing less money now to raise. Like, I'm speaking to founders right now. I have some founders in my portfolio that they might just need 1 or 2 rounds of funding, right? I hope, because me as an investor, I don't want that dilution. Right. I don't want to be diluted to bits. So, look, I would rather prefer that. And so a lot of companies are now starting to focus more on profitability quite early, especially at the very earliest stages. If not, not profitability, but also solid unit economics, right? Or solid gross margin, things like this. And then, as they scale their business, it only could get better. So, yeah.
Yeah. And from the angel side, because you've done quite a bit of angel investing, do you prefer to have more of a hands-on approach to investing, or keeping an arm's length distance in that sense? So thinking of it, maybe whether it's, if you don't necessarily do you push for more having an advisory position with the company, or trying to maybe incorporate some sort of sweat element to the investment?
Yeah, look, I think it's a combination of things, right? I think it's, firstly, you put them into 2 buckets, right? I guess it's how can you be best helpful for the founder? I think the first bucket is, one, you say that, okay, this founder needs you a lot. They may be a first-time founder, or never raised money before, but they have this great idea, and they have some solid traction, right? So I think that's the first bucket, and they're going to need you a lot, and you're going to have to help them with fundraising here and there. Maybe you're going to help them, with marketing, whatever they need, right? And then the second bucket is, you just back these second or third or fourth time founders that have had multi-$100 million exits, been founders of these brilliant businesses, and then you just say, okay, how can I help? Okay, I can give you a few intros here and there. This is what you need, and then they just get back to building. Right. So you put them, I have both buckets where, okay, some of them I just catch up monthly, and it's like, what do you call it? So it's like maybe a 30-minute chat, 45-minute chat, and they tell me, hey, I want to speak to this person, I want to speak to this person, I want to speak to this person. Can you help set it up? And then the other bucket is, hey, I need your help here on this marketing plan, or I need, as I say, I need you to help me with a fundraising plan, who to speak to, come up with a list with me, blah, blah, blah. So there's more that hand-holding approach as well. So yeah, those are the two buckets.
Okay. Yeah, that's a good way to segment it between those two sides, because from Max and I's experience as well, we've seen that actually on both sides there's the far more hands-on experience, and there's also the, hey, we'll schedule an hour-long call every month just to give you an update and answer any questions that you're having, which is completely fine too. You want to let the founders build and build in the way that they need to build. So in terms of bringing it up to current day, what is, and at TA Ventures, what is your experience like since joining the fund, and what are some of the things that you're currently focusing on and are most excited about?
Look, I think with TAV, right? Maybe let me share a bit about TAV and what we've done. So as I say, we're on to Fund 3 right now. Bit about TAV. TAV has done 220 investments to date. Out of those 220 investments, we've been able to exit around 70. We've had 6 IPOs, 12 unicorns, so pretty strong, right? I mean, you're in the US, right, Dom? So you probably heard of right. Cambrian, Adore Me, and then Europe, Impress, Sum Up. These are 100 million, like even multi-billion-dollar companies, right? We're early investors in them. So I guess, what really drove me to being in a name like TAV was not just their brand name, but also, their track record, right? And what I like about them is, that really aligned with me as well as being on the operator side and being an entrepreneur as well. So that really clicked. And also the fund size, right? I really viewed them as not just like an asset manager, but, really, as I say, a fund, which they raise like 30, 35 million, things like this. And, they generate strong returns for their investors, right? And I want to be associated with somewhere where, I can eventually, be part of the long-term journey, but benefit in the long-term upside as well. Because I think that's what venture should always be about, right? If you win, you should always win together and things like that. So yeah.
Cool. I also just wanted to touch on like maybe how your angel investment experience kind of set the stage for you, like now working with a VC. So I mean, just looking at some of the companies that you've invested in a personal capacity, I think we've seen like you did HD, Odin, Cryo Shop, Convi, Frontman, Kona Brands, just to name a few. And you said that you've done, I guess, nearly 70 so far.
Probably over 70 now. Probably over 70. Yeah.
And so, what are the ones that stand out as like the big successes, and what do you think you got right in those? And then maybe on the other end of it, the ones that didn't quite work out, and like how do you explain that, and what are some of the lessons on both sides of that, success and failure?
Yeah. So look, maybe you talk about the good ones first, right?
Yeah.
So in terms of, I mean, I think venture is, this sort of 7 to 10 year, even longer outcome, right? Especially where we're investing. Sometimes we're investing on a deck, or very, very strong founders, right, that just have this amazing idea and they say, hey, I want to build this, right? So I mean, maybe we can talk about the companies I'm quite excited for. Firstly, I mean, you talk about HD, right? That's a company I'm very, very close with, where these are top founders. One of the co-founders came from e-commerce, one of the leading, as you say, e-commerce enablers in Southeast Asia, run rates of hundreds of millions. And then, the other one ran, as I say, as CFO and helped incubate like a lot of like companies like Acom and a bunch of others, right? So really strong track record. So, I mean, I invested in them in like a couple years back. And what really interested me about them was that, whenever the VC ecosystem was very hot, right? Everyone was backing, the next telehealth company or whatever, in terms of, telehealth was very hot, right? Okay. But for me, I was like, okay, this didn't really make sense because I was actually an investor in a company like Teladoc, right? And Teladoc, I watched Teladoc rise and, the downfall as well, right? So even before the before the Livongo acquisition, and then what sort of realized to me is like, hey, if these multiples of this, or why are these companies in Asia getting these really bloated, or even in other emerging markets getting these bloated multiples, right? So I sort of saw that. I was like, okay, this didn't really make sense, and I saw HD as sort of in a way, sort of this counter to it, right? So their model was sort of this like marketplace, and then they have this like AWS model on the healthcare side, and then they've actually started doing into like this pristine care model as well in the which is a company in India, so their own like a private label and things like that. So really bullish on them, really excited them. I mean, a lot of investors at that time told me was like, oh, why invest in this company? Just back telehealth, right? But I was like, okay, I'm backing the founders here. I like what they're building. It's very exciting. I mean, and yeah, they at the beginning it was a bit hard to close that bridge. Definitely. I mean, I helped them raise as well here and there. But yeah, I mean, they've as I say, planning to announce their new funding round. So happy of that, and yeah, it's a good lead, and I think people are starting to see it now, right? Well, the valuation, the unit economics, the model is actually really working, and they're doing really well in Thailand. So that's the first one. Another company, Odin, right? I mean, you talk about Odin, right? What really interested me there was I spent some time with the Odin founder, right? And then, as I say, I actually used a few SPVs through their platform as well, set up a few. And I think what really interests me about Odin was like, hey, in the US, we have AngelList, right? We don't really have anything in Europe or Southeast Asia or these other markets, right? And the beauty of Odin, I guess, they want to sort of be the social like investing platform, as they say, for your typical more social aspect to, I guess, AngelList, right? Sort of democratizing that access to funding, and that's what I like about them. And they allow, let's say, me or you were to start a company in tomorrow, right? We can be anywhere in the world, and we can raise money and we can pull capital together, and it could be very, very quick, right? So I think before this wasn't able to do, and now they've just allowed Odin has just been this sort of next growth driver for more deals being done, democratizing that access as well. So yeah, those are the two exciting ones. And I mean, I'll give you another example. I back to Brilliant Business in India, right? This is very, very early. I'll give you an example of like the founder backing the founder, right? So this company in India is they're actually in stealth right now, but yeah, I can share the name. But in terms of a company called N+ Labs, right? A brilliant founder. I mean, at I think 13, he was mentored by at 13 he was selling software to like Indian businesses. Think about that. At like 15, he did like the largest blood drive in India. At 16, he was mentored by the president of India for that, right? And at 19, he was, found out about Stanford, and he was like, hey, this is pretty cool. I want to go there. He hadn't heard of Stanford before, and he's like, yeah, why not? And then, so he paid his way through Stanford with his money he's made in the software company at a young age. And then now, as I can say, what do you call it? He came to me and was like, I'm raising a bit of capital, and was like, oh, I want to build something like the next gen of entertainment for India, right? And for me, what really interested me was him, the individual. I think seeing the resilience of this person. So these are the things we look for at the early stage, right? So those are a few examples. And I guess not so good examples, right, was back to, during the crypto upturn, things like this. I mean, crypto's back, but let's see for how long, but in terms of right now, there was a company I backed a few years ago. It was a company called Ziglu in the UK, Europe, right? So what sort of happened there was that The crypto market was super hot. Bitcoin was going to the moon, and we were all super excited, right? And sort of they were building like the equivalent of, I guess, a ZipMax, whatever you'd have in Asia for Europe, right? And what actually happened was that during the height of the bull market, crypto, was going all-time highs. And then this company, which I invested in, like, at seed, was like, hey, we got to, like, as I say, it was all announced. And Robinhood, after they IPO'd and stuff like this, was like, hey, we want to buy this company for 200 million, right? And then what sort of happened was that, it was great, and everyone thought the deal was going through, and then it took longer than expected. I mean, it would have been like a really good return in the like 18-month period I was holding it, right? And very strong founding team and things like this. But I mean, that's just maybe an example of the market not heading the right direction. Yeah, I mean, as you probably know, that deal didn't go through. I mean, it fell apart. I don't know if it's even worth 10 now, to be honest. But I think especially after with FTX and all these things, right? So look, I mean, maybe they restructure and they figure it out, but that's an example of, I guess, looking at other businesses, right? So learning from, I guess, other aspects. So sometimes, you not just need the founder, but you need the right timing as well, right? I guess on this crypto one, it was good. It was a good founder, but the timing was, it was up, but the time of closing of, the acquisition was later, right? So yeah, I'd say those are probably a few examples to give.
Mm. And just like on that, would you say there are any particular red flags or green flags that you can identify in kind of people's personalities or their just general like characteristics that you've kind of have been good feelings over time to give you that better kind of sense of who's heading in the right direction or not?
Yeah, look, I mean, I think you can't take that one size fits all approach, right? I mean, I think it's going to have to be like case by case, each company, but I mean, maybe talk about the green flags first. I mean, the green flags, obviously, like founder market fit, this person has, been in maybe a similar industry, but maybe this is more just a tech enabled approach, right? He's, maybe this expert in X, Y, and Z, but he's looking at a more tech enabled version of X, Y, and Z, right? And he's the best person to solve it. I guess the second thing is, maybe they've just experienced a pain problem like very, very well. And like, you're like, okay, whenever you see them, they're like, okay, they're the right fit for this. So the founder market fit is very important. And then, other green flags would be like, not necessarily more on, okay, what are their numbers like, their traction, things like this. But I guess for us, what traction probably matters a bit less than what I guess like other maybe investors would say, especially at our stages, because, for us, it's all about the founders and the founding team, right? Because, business models evolve here and there, but, the teams stay more or less, especially the CEO stays more or less the same, right? So you're backing him. I mean, if you look at also like in the NASDAQ, right, a lot of the best performing companies are founder led, and continue to perform better. So simple green flags like this, right? And then maybe the red flags, I guess. Oh, I think it's a combination of things. It's, again, you need to put on a case by case, right? But maybe their first red flag is, I don't know, maybe their cap table, or maybe, I don't know, maybe they've given away too much equity and they've just messed up the cap table completely, and I don't know, needs restructuring from seed, right? That's not a good look. Or maybe even like even a bit after that. Second thing is maybe, how much money they've raised, where they're at, the valuation, entry point, things like that. I guess that's very important as well, especially when exits are at much lower ranges than, I guess, the US and Europe. So those are a few things, as well as, what's their burn rate, right? I guess how much they're burning. I mean, how much, as they say, how much salaries are they taking, things like this. I mean, for me, I mean, I understand like founders have to have salaries as well here and there to, support their family or, them as an individual, right? But, what's a fair amount, things like this. I mean, if you see a company taking like, so much at pre-seed and seed, it's probably a bit of a red flag, right? From my point of view, than a founder that has like, okay, more or less all equity and, taking a bit here and there. So, yeah.
Yeah, one of the things that you mentioned there is the cap table, and I'm curious, just from your side, when you like, how would you define a messy cap table, and what would be some of the approaches or strategies that you would take in trying to either consolidate that if you're interested in making an investment in the company, and once you do, thinking about how to, quote unquote, clean it up more or less?
Yeah, I mean, maybe we can talk about in different stages, right? So, I mean, as I say, the first stage would be, pre-seed, right? I always tell my founders and things like this, why don't we try build this like superstar angel group, right? So, as I say, sometimes even before they have a cap table. So, why don't you get an expert in marketing? Why don't you get an expert in fundraising? Why don't you get an expert in product, in tech, so that as you're growing this company, you have 5 or 6 advisors you can just go to with it, more or less just free advice, right? And you get them in at whatever ticket size. I guess that's how they craft the cap table early. And I guess like later, it sort of depends, right? But we mainly focus from pre-seed to Series A. It's pre-seed and seed predominantly, but then we have some opportunity deals a bit later, right? I mean, for example, at the fund we did Series A for HD, right? I brought that to the fund as well. So, I mean, at seed, at Series A, it could be a combination of things. I mean, how much does the founder own? How much does investors own? How much do the angels own? And then just, I guess, cleaning it up. Like, for example, if you're doing a price round and then you have this fund at maybe Series A or something that is looking to invest, a certain amount and own like 20% of maybe 20-25% of the company, or even around that range, right? 15-20, let's say. And then, they might take a board seat. Is there any opportunity to have angels that, got in the friends and family that own a larger portion, if they're not going to help that much going forward? Is there a way we can offer as I say, sell their allocation obviously with them, like in secondaries or something, and then they can buy it out, right? And then, the new fund could, it could be better optics for the company, and it could be better for the founders as well as also the angel investor, as they get an exit with a good return, and then the fund could sort of hit their percentages they want to hit. So yeah.
Oh, sorry. I was just on mute there.
All good.
Yeah, I think So one thing I also wanted to touch on here is you mentioned about how TAV is quite focused, or is becoming more focused on emerging markets. And you've done 200 or so investments so far. Is it right? It's mostly at the Series A level. Is that correct?
No, pre-seed and seed actually.
Oh, okay.
As they say, 220 investments in pre-seed and seed. But yeah, look, I mean, like as I say, like for example, right? Predominantly, the fund is actually 50% of the focus is US, 30% is around Europe, and 10 to 20% is rest of the world, Southeast Asia.
How do you kind of think about rest of the world, right? Like how do you guys do that kind of like top-down analysis on like which countries you want to focus on? I'd be really curious on that. That's like a very interesting, interesting. There's so many countries to choose from, right? In that EM space.
I can maybe share some countries I'm excited for as well, right? In terms of with TAV and myself personally as well, right? I mean, let's talk about maybe a bit about sort of our approach and what we look for. So, obviously very excited for Southeast Asia. The first, I've led 3 deals with the fund, brought 3 deals with them and worked on that. I mean, one was in India, one was in Thailand, and one was in Indonesia, right? So I think you can see there's an Asia focus I'm trying to bring in. But some of the markets, I guess it depends, right? I think for us, we look at key data points, sort of like not just what the risk reward scenario of that market is, but, what, for example, things like GDP or in the country, the growth rate, startup funding available, what successes have come out of that country, the geopolitical landscape, so we look at multiple factors, right? And I'll maybe give you a few countries I'm excited for. One country I'm really excited for as a company, is obviously a country like Bangladesh, right? I mean, if you look at Bangladesh, Bangladesh is, I think, was one of the fastest growing economies globally. Like, I think because last year or something, maybe them in Vietnam or something like that. But if you look at Bangladesh, right, it's sort of a market that is very, very early in terms of funding. We've seen a few big successes. No, we haven't seen like that much like massive successes, but we've seen like, decent ones, right?
I saw
Here and there.
Prio Shop recently had a 5
Yeah.
million raise.
So we just raised, they just, well, I mean, I'm advisor to Prio Shop as well, I guess, right? In terms of, but they just closed around their Series A, right? I mean, in terms of, I went before that, but in terms of, that's a company I'm very excited for. Back to the points about the data, Bangladesh has one of the highest, not just like, as I say, the highest like younger population in the world as well. And I think Bangladesh has massive population as well in terms of not just that, but the age as well, the people under 30. So what does that mean, right? They're very tech savvy. The online internet penetration rate is very high. Everyone's using mobile, so that's always good signs, right? So I think the data points will show that Bangladesh is heading in the right direction, right? But I guess time will tell if that makes the most sense, right? And then so yeah, I'm excited on Bangladesh. I mean, another market I'm quite excited for is obviously Thailand. Being in Thailand, right? Would you classify Thailand as an emerging market? I guess people could look at it from 2 points of view. Thailand, as I say, has one of probably the highest, if not, actually no, apart from Singapore and Malaysia, right? I think the GDP per capita is next, but Thailand has one of the most highest average revenue per users, relatively no startup competition, but high conglomerate competition, right? If you compare it to like another market like Indonesia or something, sort of the opposite, right? I mean, you have like so much startup competition, but you have really low average revenue per user, things like this, right? So I guess for me, although I'm very excited for Indonesia as well, I've done some deals in Indonesia. Thailand, the risk reward is just very, very strong, right? Because the middle class inflection point, we are there already. And we are just going to keep growing. The only thing I say, Thailand has quite an aging population, but I guess that means an area like healthcare could be a big focus, right? And could be a big area that, drives GDP to that next income bracket. So, yeah.
Well, yeah, and the other thing to obviously keep in mind, I guess, is that like you do get 30 million tourists a year, so that does help with keeping keeping the demographics kind of in shape in terms of spending.
Correct. Exactly. Like Thailand is very, very exciting. Like Thailand sort of traditionally, with funding and things like this, right? I feel like there was actually an article or like a report on Thailand and the funding ecosystem, and it was very people were saying like, oh, which is true, right? And I saw it as well. I've always saw that there's a funding gap in Thailand. You have these angels that do like 10, 20K ticket sizes, and then you have these like funds that do like, oh no, sorry, not even funds, CVCs, which do like 3, 4, 5 million, right? You don't really have anyone in that middle to fill that gap of like 100 to 200, 300K, right? And to make that ecosystem really work, you gotta, have that sort of like pipeline, right? Of, the angel, the small fund, and then, the larger fund, right? So, but actually it's put Thailand in a good position because I think in the long term, it will be beneficial for Thailand because Thailand has always been a market that is very hard to raise money. I always make the joke that, if we can raise money in Thailand, we can raise money anywhere, because so like raising money in Thailand is like the equivalent of, I don't know, raising like 4 or 5x in like, like Singapore or US or something, right? Right. So, so Thai founders have always, not just Thai founders, but founders that are building in Thailand have just always had it a bit more, I guess, harder in terms of raising money. And having to do more with less. But what does that mean? As an investor, I think that's good, right? Like for example, if they're getting to profitability much quicker, they've always been focused on profitability. So when like there was a market downturn, right? Although it did hit the impact, did hit quite a lot of companies, there were some founders that were just continuing building, and they were like, hey, the markets, like the valuations of the like companies in our sector have gone down. I'm like, oh yeah, they're valued at this, and then you're like, oh, but in Thailand we're valued already at a similar amount, right? Just because Thailand has this emerging market discount. So which I don't think they should have it as high, right? So yeah, but that's an opportunity for us investors. So
yeah, just a few follow-ups on that. Like I think of what you mentioned earlier about like the investing in a crypto company. I think that was probably at the time when it was very consensus, right, to be investing in crypto. And so
it was more of a back on the founder, the bet on the founder here, because I mean, the founder, yeah, he built, he was the one of the co-founders of Starling Bank in the UK.
Okay. Yeah.
So like, he's built a very big business, right? So, or like one of the
I guess
senior guys.
the reason I was mentioning that is because I think on that end, right, it's like, that there are always going to be areas that are really hot, that are really exciting. But then on the other end of it, when you talk about this kind of risk reward, right? So when you look at somewhere like maybe Indonesia or Vietnam, maybe the risk reward isn't quite the same as Thailand, because it's quite consensus, right? So for investing in, let's say, e-commerce in Indonesia and Vietnam right now, the valuations would be very high. But Thailand, on the other hand, and also from our side, when we got going with launching Satori Giants, we were really excited for Thailand as well because of our experience also in Cambodia. Cambodia is a complete underdog.
It's like this frontier market, right? Which just has like a lot of potential, but it's just like very, 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 very early innings.
Right, and it's also like which countries can be a springboard, and I think Thailand, it does have that potential. And I think what you also mentioning about how, and we've talked to a few founders about this, and there is that you can quite easily raise the pre-seed money, the angel money. If you want to stay in Thailand, focus on Thailand, you may only have you may only have like the corporate VCs to look at, but these businesses that start in Thailand, then scaling kind of regionally, and then taking capital from wherever they may. I think that's a really exciting opportunity. Do you see that with the founders right now in Thailand? Are they seeing it as like a launch pad and then it's go regional, or is it just let's focus on Thailand?
I mean, I guess it depends on the company, right? It depends on, can this be a regional play? I mean, obviously it can be a regional play. It's very exciting. But I think what we're also seeing a lot of is, companies that actually, getting to more or less profitable break even, right? So it's like, they can raise on their own terms. So, I mean, do they actually need to do a funding round? And if the funding round is purely just for expansion, right? So, on the other hand, I am seeing some of that as well. But I mean, Thailand's already just a big enough market. I mean, we have a population of 70 million people. And it's, as I can say, and the spending power is very high, right? So I know, as you say, it's quite a bit of this in Bangkok, but I mean, a lot of these businesses are being built in Bangkok, right? But then, I mean, look, regional plays are, you're seeing companies are exciting as well. I mean, obviously HD, for example, they're in Thailand right now, but they're in Indonesia as well. Small part of their business is Indonesia, and I think they plan to go to other markets later, right? So I think we can see that, but I guess it depends on, does it make sense for the company, right? So
So maybe on the other end of that, it would be interesting to just actually understand which markets are you like sort of contrarian on, right? Like the ones that maybe there is too much focus, and you actually think of like already maybe peaked.
I mean, I was like, I mean, I was quite contrarian and on actually, like, I guess taking the approach of, I've always said like Thailand since 2021, right? I was like, okay, Thailand, the data doesn't lie, right? I mean, like, and they say it's showing it's heading in the right direction, but I sort of saw, wait, why is funding not as readily available, right? But people said like geopolitical things and things like this. But I guess living in this country, growing up in this country, and like building a strong network in this market, I mean, I would see the geopolitical landscape in like Thailand and other markets are, if not similar. So why does Thailand have this massive discount? So anyways, that, I guess that sort of mismatch, right, was an opportunity for us investors, right? Where if another investor wouldn't want to go into this market, I mean, for us, if the data points show market, I mean, live in the country, blah blah blah, things like this, then it makes sense, right? So that's an example one. I think Bangladesh was probably another one as well. People were very, I guess, against a lot. I mean, as I say, but it's still very early. But Bangladesh as well, starting to get exciting here and there. I mean, people are like saying, oh, so just back India, right? Let's just do India instead. But I mean, look, I think it's back to the point of the risk reward, right? What is your entry point and where are you planning to exit, right? You probably saw a lot of companies in India. I spoke to some founders and they want to raise at really high valuations as well. So for me, the risk reward doesn't justify that high valuation, right? Because one, India has these, like, they've had massive outcomes, but it's like, have they had like European and US outcomes to really justify that, that high, pre-seed or seed valuation, or even series A, right? So yeah, because for us investors, our job is to return capital to our, to our LPs or other investors, right? So yeah.
Great. And I think heading on into maybe just more of a more like a macro perspective. I know we've been talking about a lot of the excitement of areas that you're seeing in Bangladesh and Thailand, and some of the contrarian opinions as well. I think as we've discussed before, there's been a recent decline in funding since 2021, and there's more of this pressure on startups to basically show a clear path to profitability. Overall, just from your perspective, how do you anticipate the VC landscape evolving in the near future, especially in a region like Southeast Asia, where there's going to be this massive, considerable growth that's still going to occur over the next couple of years?
Yeah. So look, I think that's the beauty of emerging markets, right? We sort of see what happens in, I guess, the rest of the world, the developed markets, and we sort of, 5-10 years later, sort of evolves into the emerging markets, right? We've seen this multiple times. But look, I think in general, some of the things I'm just, I guess, with the firstly on the fundraising landscape, things are, things are starting to pick up now. You and I know this sort of, started in 2021 and things like this whenever, the markets were at its peak. And then obviously with interest rates, things like this, it sort of happened in the US, and then multiples in publics really went down. And then that affected private, right? Because the late stage private, they need IPO, right? Or they need M&A, right? So if the buyer, if this public company doesn't have cash to do the M&A, or as they say, their multiple's been hammered, and their multiple has been contracted, and they're down 60, 70%, 80%, which a lot of growth companies were, why is this private worth this, right? So I think it's a combination of things. So that's just one thing. But in Southeast Asia, I think funding is starting to pick up. It was definitely been slow. I think, the growth as much, I'm not very interested in too much at the Series B, Series C, Series D onwards, in emerging markets. But I think pre-seed to Series A, I think massive opportunity, right? Providing the right entry point. I think that matters a lot because, in Southeast Asia, right, I think, one of the big exits was like 2C2P, right? And that was like 500 million, so, and that, was a while back, right? So will we see that? I think we'll see more of those than like, $5 or $10 billion companies in Southeast Asia. Therefore, like, if you want to go and not like at 100 mil, 200 mil, right? If you want to generate like 10, 20, 30, 40, 50x, you should try going like, I don't know, sub 15 or something. For me, I would love to go in like sub 15, sub 10, sub 5, even if I can, right? It just depends because, think about it. If you get in a company at like 2 or 3, you exit at like, I don't know, 40, 50, it's still done really well, right? And the chance of it is much better than, I guess, a company you go in at like 50 and, you exit at like, I don't know, 1.5 or 2 billion. So yeah.
Yeah, that's why the early stage is so exciting, right? That's
100%. Because I guess the beauty of this, right, is that, for me, I'm really extremely grateful that I can meet all these great founders and things like this every day, right, and speak to them and say, hey, they're all building these, like, have these goals of building this solving this massive problem, right? Whether it's like making healthcare more affordable, insurance more accessible, or even like, places where there's no, as you say, in the fintech side, unbanked, make the unbanked more, bankable, things like this, right? So, I mean, and you get to like see, and, you get to maybe get in some brilliant businesses at, ground zero and watch them grow and help them, right? So I think, yeah, that's a really cool thing about venture, and, I'm happy I'm able to do it. So, yeah.
Well, we talked a lot about your experience in venture. One thing that we do want to hear a little bit about too is you're not only just a VC, but you also have a bit of career working on Slayzone. And so it would be great to tell us a little bit more about what's going on there, what's keeping you busy.
Yeah. So look, I mean, as I say, I guess my day job is venture, right? I mean, but for me, I mean, as I say, I'm a very consumer focused person, right? So I guess, it's not, I would say, I got a good opportunity. And, as I say, coming from this media background, because as I say, my family and my sister, right?
Mm-hmm.
I was like privileged to be able to do these things, or, grateful to get these opportunities. So I think it's just like, and because it's like it's rare to find this tech and media combination, right? Especially in venture, because I mean, you and I know venture is probably one of the the most hardest industries to get into, and build in that area, right? Just based on everything, but also so it's like, how can you be unique? And if you already have an edge, how do you have even a greater edge, right? So it's just crafting this out. And so, yeah, I sort of thought tech and media was the angle. I mean, the media side was never really what I thought about, but look, it was an opportunity, and, continue to actually do a few projects here and there.
Mm-hmm.
And, if you can grow that media side, and you have that tech angle, it's very hard to compete, right? And I guess that's sort of my long-term goal with that. But obviously, do great projects, work with great people, work with great angles, and you have your sort of like investor side, and then you have also your other side as well, right? So it's good to have like a combination. So yeah, that's a bit about that.
Yeah, that's cool. Yeah, the fun side, we'll call it, right?
No, come on, it's a bit like it's more like it's in a way, I think it helps, right? Because both sides. I mean, if you go on like podcasts and stuff like this, if you do films, and you have that, not just the distribution side, which I think is massive. If you can leverage, you can build a good distribution side. Plus, you can also you have that also experience it, being more, I guess, confident on the camera. You go on podcasts, you go to public speaking and things like this. They all play a hand in hand, right? So I guess for me, it was an opportunity I couldn't refuse. And then, combining the tech and media is just like very rare to have. So yeah, that's sort of a bit about that.
Yeah, entirely agree. I mean, with Rising Giants on our side, we've been building it for about 3.5 years now, and it's just such a rewarding and enjoying feeling, being able to, and also very, very humbling experience to speaking with so many different founders coming from so many different backgrounds, also investors too. But you really get to learn about so many different people, so many different perspectives, and like being on the interviewer side, it's really enjoyable to kind of sit back and listen and really take in what people's perspectives are. And Max and I always talk about how valuable that is. And as time goes on, right, that there are other opportunities and doors and things like that do open up.
Yeah.
But having that genuine curiosity and interest too is so is so valuable to have.
Yeah. I mean, I'm totally with you on that, right? I mean, like, as I say, people, as you say, if you're always curious, and, you always want to, I guess, try different things, do new things and things like that. And then, I think a lot of them will be quite connected, as, the things you choose and stuff like this. And if you can sort of find that combination, it's just really, really good, right? Because, you do what you love. So yeah, look, I mean, especially when you're young, right? I mean, it's good to try out multiple things, and not just that, but also, as I say, if you want to build something unique, you should try, okay, if this fits and if someone else doesn't have this edge, you could, like, that's your advantage, right? So, yeah.
Yeah, exactly. Like those next steps in that journey become more and more organic. So
Sure, investors and things like this is all heading down the media approach, right? I mean, you and I know every fund here, they have their sort of like content creation, right? You always get the article and things like this, so I mean, it's like building your own, in a way, your own engine, the same way you and I know that. So if you have that combination of the media angle, and from a personal basis, it's like you have that competitive edge over like some funds even, on distribution, leveraging this and things like this, which it's very hard to compete, right? So yeah, for me, it's all about the experience. And as they can say, building that engine, right? And, you've built that engine with Rising Giants. You've been able to have start your own mini accelerator fund, whatever you want to call it, right? I guess if you have that engine, you can do what you want with it, right? And, these other guys that have much more capital to play with, you're still able to compete on the same playing field, just based on having that media engine. So,
and speaking of media, what are some of the podcasts or even outside of media, books that either you really like to read or have influenced you, either from on the personal side or business side?
Yeah, I mean, look, I think it's a for me, I'm someone who's always like quite curious, right? I like to read a lot, whether it's articles, numbers, data, things like this. I mean, look, spent like the last few years looking at pitch decks, right? Like more on the investor side, so I've probably seen like, I don't know, probably like over 1,000. So kind of got used to that side, right? But I mean, just getting all these things, reading all these things, macro reports, things like this, right? It's just super, interesting to me. Latest technology trends, Substacks, articles, things like this, reads. I mean, some of the ones I read quite a lot is on the article side. You probably know like Digital Native by Rex Woodbury. He's a guy I think is very sharp. And then on the podcast side, there's one I really respect. It's called Turpentine VC. Those guys are really, really smart. And so, yeah, I mean, obviously you have the usual Golden Pod and the 20 VC, right? But I guess that's probably a lot of people watch it now. But to Turpentine VC, I think is quite under the radar, and they bring in quite a lot of good guests. And yeah, I mean, they have good conversations, right? And, for me as a young investor as well, it's good to learn from these people who've been in the industry for like 30, 40 years. So, yeah.
Yeah. And, as we close out we close out the episode, our traditional closing question that we like to ask each of our guests is, what is the greatest piece of advice that you've ever been given?
Okay. So I think in terms of, there's a few, right? I think in terms of that, have really stuck by me, but maybe I'll just pick one. One that I guess is, I learned from a young age growing up is that, to always take moonshots whenever you're young, right? As I say, go as big as possible. And, because if it works, then great. Brilliant. If it doesn't work, you learn a really important lesson very, very early, more earlier than others, right? So I guess that's sort of the aspect I look at things, right? As I say, if it works, brilliant. If it doesn't work, I learn it way earlier than others. So yeah, that's, I would say, is, if you get an opportunity, try to go as big as possible. If it works, it's a great outcome for you, maybe your family. And if it doesn't work, then you learn a very valuable lesson, right? Probably 10 or 20 years earlier than anyone else. So, yeah.
So, note to self, I'm going to 50x leverage every trade that I make.
Maybe not that. Maybe you got to calculate the things,
Only
right?
the
But
moonshots.
you know what I mean, right? I mean, like, as I say, like for example, Rising Giants, right? You can,
right.
You have this outcome to be this like leading media company in, I don't know, frontier markets or whatever, right? That could be the grand vision. And then sort of you can sort of be this media arm where you do like multiple things, podcasts, movies, series. I don't know, right? In terms
Right.
of a bunch of things, and then you have this like, so you sort of build this, so that could be maybe the grand vision, right? I mean, what is your guys' grand vision of Rising Giants? I mean, go
Yeah.
big, right?
Right. Well, to be honest, I've been told I have a face for radio, so I don't know about the TV shows and movies, but we'll stick with the podcast.
All right, podcast will be a starting point, and we'll see you on CBS or sometime soon.
Right. Exactly. Well, Richard, we really want to thank you for taking the time to be with us today on Rising Giants. We have the pulse on the title.